Hey everybody, Sean here from Guaranteed Rate. Wanted to give you a quick spring market update. So we're going to talk interest rates, mortgage applications, what we're seeing, FHA, the Fed, inflation, all that kind of stuff, and we'll try to keep it quick. So they say March comes in like a lion, leaves like a lamb, and that's certainly what we're seeing with interest rates and the weather a little bit, which has been awesome. Interest rates having peaked in March at almost 7%. Kind of surprisingly, February was a brutal month with rates going up quick. Rates peaked at around 7% at the beginning of March, and they've come down. By the end of March, we were seeing rates in the high fives, low sixes, due to mostly economic turbulence. We saw a banking crisis started with Silicon Valley Bank, spread into other banks, and that caused some flight to safety. Mortgage rates came down, and boy, have we seen buyers take advantage of it. You know, when rates come down, there's increased affordability, there's increased excitement, there's more buying power, and we're certainly seeing way more activity in the housing market. We saw actually rate lock volume increase 43% in the month of February to March. It's actually the biggest increase in rate lock volume that we've had in over 5 years from February to March. That was actually kind of surprising. So the big jump in purchase application actually has decreased refinance market share to only about 13%. So not a lot of refis going on, although we did see that increase a little bit. We saw a little surge in cash out refinances as rates came down in the month of March. You know, as a reminder, homeowners across the U.S. have more equity than they've ever had before. So utilizing cash out refinance when it makes sense to do some debt consolidation, maybe as credit card debt has spiked, do some home improvements. A lot of people are staying put in their homes and sticking with what they have, maybe a opportunity to do some renovations and upgrades. But purchase applications have actually risen in 5 of the last 6 weeks. So still down about 31%, but quickly making up for that deficit. So I've noticed it big time in terms of just people are out there, the weather's better, there's more inventory starting to creep out there. So definitely way, way more activity. One of the places we're seeing a huge increase in activity has been FHA. So we talked about it a couple weeks ago. FHA announced for the first time in 10 years that they decreased their monthly PMI. It was a huge decrease. So I've noticed a big uptick in FHA deals for primary residences on single families, but especially on 2, 3, and 4 family houses. We're seeing a big, big increase in the usage of FHA. So if you're a real estate agent, be aware you're going to be talking to more FHA borrowers out there. It's a great loan product with super low rates and now really affordable PMI, which was a drawback before because before it was much more expensive. If you're a consumer out there, definitely let's talk about it, especially if you're thinking about buying a 2, 3, or 4 family, you're a first time home buyer maybe, and only have 3.5 or 5% to put down. It's one of the only games in town. So that's something to keep an eye out for. Mortgage rates. So this past week, we're seeing rates kind of hovering between the high fives, low sixes, which has been great to see. This is the 4th week in a row of rates declining. Rates are about a point and a quarter higher than they were this time last year, but they're also about a point lower than they were in February of this year and also in the fall of last year. So rates are definitely on their way down. I think that trend is going to continue for the rest of the year, in my opinion. Why it's exciting, you know, is that the average home buyer, somebody's buying a house for about $600,000 or borrowing $600,000, more importantly, they're going to save about $280 a month. So that's a lot of buying power and a lot of affordability just with rates coming down that much this past month. I think you'll see mortgage applications continue to increase as rates stabilize and continue to trend downwards. That's always what happens. People get excited about buying power. People are also looking at other type of loan products. Adjustable rate mortgage has been super, super popular. We're talking to clients about comparing a 30-year fixed rate mortgage with either a 7-year ARM or a 10-year ARM. Obviously, comparing the affordability, comparing the interest savings, more principal pay down. And then as a reminder, we think most of these clients that are buying houses this year so far and the second half of last year are going to be in a really great opportunity to potentially refinance. I'm predicting that rates will be down to the mid fives, possibly as early here as July, mostly due to inflation coming down. So next topic of conversation. Great news this past week. The March CPI inflation measure index, along with the PPI numbers, both came out. So it showed inflation actually only increased 0.1%, which is really low compared to how much it had been increasing before. It was lighter than expected, which is also good, and it brought inflation down from 6% down to 5%. Inflation has declined from its peak of 9.1% at its peak last June down to 5%. So it's a big gain. Its target for the Fed is to get it back down under 2%. As inflation goes down, mortgage rates will follow it down. And we also got the PPI, another inflation report, much cooler than expected. Another good sign that inflation's on its way down, and PPI is typically a great indicator. So these are great signs that, you know, all the stuff the Fed has been doing to raise rates, to cool inflation, to reduce some of the money supply is working. And as rates come down, I think you'll see more buyers get back into the market. I also think what's going to happen personally is the Fed stops cutting rates, signals that they're even going to cool rates or pause and maybe even cut by the end of the year. I think you'll also see the stock market like that. Stock market's had a great run to start the year so far, especially the NASDAQ. And as that happens, that creates more confidence, it creates more wealth, creates more buying power out there. So I actually think 2024 is going to be a combination of lower rates and more confidence out there with some wealth created through the stock market appreciation. And so I think it's going to be much similar to 2022. So I think this year is a great opportunity for buyers to be out there because I think the market's actually going to get more competitive in the future. And lastly, I'll wrap it up. We got the Fed meeting minutes. Here's what the Fed members are saying. So it signals that they're getting closer to the end of this Fed rate hike cycle. Several members considered foregoing a rate hike due to the banking crisis. They believe a mild recession is on the way later this year. They think it's going to be about 2 years to kind of shake through that recession. We've been talking about recessions a lot in our market updates. We go into offices, educate our real estate partners. A recession does not mean a housing crisis. A recession typically means lower interest rates, which fuel housing. And typically, if you look back at the last 6 recessions, in 5 of the last 6 recessions we've had, home prices have actually appreciated. The one outlier was 2008, which was a housing crisis that caused a recession. So I think with low inventory, lower rates, potentially a better stock market, housing is going to keep appreciating. That's what we're seeing so far this year. I think it's a great opportunity to get in now and take advantage of that appreciation and refinance later as rates come down. They also believe that the recent banking crisis will lead to a pullback in lending, and it's going to also a reduction in credit and credit availability. So I think you're going to see some of the banks kind of change their guidelines, maybe get themselves out of the mortgage business. I can tell you we're committed to the mortgage business, and we're all in on having all the right products for consumers to win. I think you're going to see some people take themselves out and kind of step back and pause. So that will also reduce availability of money, which will also help. It almost acts similar to a rate hike as credit pulls back a little bit. They also expected the Fed fund rates to peak in May, which is next month. So we are expecting a Fed rate hike next month. I'm predicting a 1/4 to a 1/2 point increase and maybe one more this year. And then I think we pause and they start cutting. It seems like the Fed members are finally starting to believe that inflation is actually on its way down and that all the lagging indicators are kind of starting to come into play. We're certainly seeing on our side that seems like things have normalized. So overall, lots of really positive things going on in this market. If you need help with a pre-approval, please let us know. We're having a lot of success with our power bid, which is our pre-commitment. We're having a lot of success. We rolled out same-day mortgage. We're really diving in and educating our clients about everything from the benefits of renting versus owning. We're talking about adjustable rate mortgage products, temporary buy downs, really just trying to educate in terms of trying to make sure we put you in the best possible situation to save the most amount of money, but also utilizing power bid and same day mortgage and 10-day close to really have your offer stand out and win amongst all the offers. So buyers love it, buyers agents love it. It just signifies certainty and speed, and sellers agents really love it. The feedback we're getting from sellers agents is like, we picked your offer because of the ability to close quick, because of power bid, because of you getting clear to close faster than anyone else in the industry. So all positive things. As always, if you'd like us to come into your office meetings, if you're a real estate partner, please let us know. We've gone into over 40 offices so far this year. If you're a client that needs help with a mortgage, please hit me up, shant@rate.com, or you can direct message us here through any of our social media platforms. Have an amazing week, everybody. Thanks again.